Imagine your county, a place where the local government is always looking for ways to improve public services, infrastructure, and overall quality of life. Now, imagine if this county had a new tool in its financial toolkit, Bitcoin, stacking Bitcoin like it's gold. Intrigued? Let's dive in. Bitcoin, often referred to as digital gold, has captured the imagination of investors and tech enthusiasts alike. But what if it could also capture the interest of county governments? Bitcoin's come a long way since its inception in 2009. Initially dismissed as a fringe technology, it has evolved into a significant financial asset. Its journey from obscurity to mainstream acceptance is nothing short of remarkable. From its wild early days of being mined on home computers and traded in niche online forums, Bitcoin has grown into a global phenomenon. Early adopters saw its potential, but few could have predicted its meteoric rise. Now it's not just a playground for tech geeks or speculative investors. Bitcoin has matured, attracting interest from institutional investors, corporations, and even governments. For tech geeks or speculators, Bitcoin was a revolutionary idea. Today, it's becoming a part of everyday financial transactions, with Bitcoin ATMs and apps making it accessible to the general public. It's being eyed by some pretty unexpected players, like county governments. Why would a county consider holding Bitcoin in its reserves? The reasons are multifaceted and compelling. Why? Let's explore. Well, let's break it down. First up, inflation. Inflation erodes the purchasing power of traditional currencies, making it a constant concern for financial planners. Traditional reserves like cash and government bonds lose value over time because governments keep printing more money. This devaluation can significantly impact a county's financial health. And bonds lose value over time because governments keep printing more money. The more money in circulation, the less each unit is worth. It's a simple supply and demand issue, more money. But Bitcoin operates on a fundamentally different principle. Its supply is fixed, making it immune to inflationary pressures. It's capped at 21 million coins. This hard cap ensures that Bitcoin remains scarce, a quality that many investors find appealing. No more, no less. This scarcity is built into its code, making it a deflationary asset. Unlike traditional currencies, Bitcoin's value isn't eroded by an ever-increasing supply. That's some serious scarcity. And scarcity often drives value. As demand for Bitcoin increases, its limited supply could make it an even more valuable asset. Next, diversification. Counties usually stick to safe but kind of boring assets. Think government bonds or real estate. These assets are stable but offer limited growth potential. Government bonds or real estate. While these investments are considered safe, they don't offer the dynamic growth opportunities that Bitcoin does. Adding Bitcoin spices things up. It introduces a new asset class that can potentially offer high returns, albeit with higher risk. Its price moves differently from traditional markets, providing a unique hedge. Bitcoin's price is often uncorrelated with traditional financial markets, making it a valuable diversification tool, a unique hedge. This means that when traditional markets are down, Bitcoin might be up, and vice versa. It's a way to balance the financial portfolio. And let's talk transparency. Bitcoin runs on a public blockchain. This technology ensures that every transaction is recorded and visible to anyone who wants to see it. Every transaction is out in the open, making it easier to track funds. This level of transparency is unprecedented in traditional financial systems, making it easier to track funds and cut out the middleman. With Bitcoin, transactions are peer-to-peer, reducing the need for intermediaries and their associated fees, and cut out the middleman. This can lead to significant cost savings and increased efficiency in financial operations. Imagine lower costs and faster transactions. Sign me up. The speed and cost-effectiveness of Bitcoin transactions are particularly appealing for county governments looking to optimize their financial operations. Of course, it's not all sunshine and rainbows. Bitcoin's price can be a roller coaster. Its volatility is one of the biggest concerns for potential investors. Of course, it's not all sunshine and rainbows. Bitcoin's price can be a roller coaster. And then there's the whole regulatory maze. Navigating the legal landscape of Bitcoin can be challenging, can be a roller coaster. And then there's the whole regulatory maze. Governments around the world are still figuring out how to regulate Bitcoin, adding a layer of uncertainty. There's the whole regulatory maze. This can be a significant hurdle for counties considering Bitcoin investments. But with careful planning, counties could navigate these risks. By developing a comprehensive strategy, counties can mitigate potential downsides while capitalizing on Bitcoin's benefits, could navigate these risks. Look at El Salvador, using Bitcoin as legal tender. This bold move has put the country on the map as a pioneer in cryptocurrency adoption. Look at El Salvador, using Bitcoin as legal tender. Or Miami-Dade's crypto-friendly policies. Miami-Dade County has embraced cryptocurrency, exploring its potential to boost the local economy. Crypto-friendly policies. These pioneers might just be onto something big. Their experiences could serve as valuable case studies for other counties considering Bitcoin. Might just be on to something big. The world is watching these early adopters closely, and their successes and failures will shape the future of Bitcoin and public finance. So, could Bitcoin be the future of county reserves? Only time will tell. The potential is there, but it comes with challenges that need to be carefully managed. So, could Bitcoin be the future of county reserves? Only time will tell. But one thing's for sure, it's a fascinating new chapter in the world of finance. The integration of Bitcoin into county reserves could revolutionize public finance as we know it. We'll tell. But one thing's for sure, it's a fascinating new chapter in the world of finance. As counties explore this new frontier, they could pave the way for broader acceptance and integration of cryptocurrencies in public finance. It's a fascinating new chapter in the world of finance. The story of Bitcoin and county reserves is just beginning, and it promises to be an exciting journey. In the world of finance, as we watch this story unfold, one thing is clear: the financial landscape is changing, and Bitcoin is at the forefront of this transformation.